What's up, everybody? Welcome back to another video. I am Jose Rodriguez, team leader of the REJ team with Keller Williams here in Hudson Valley. And I'm featuring my mortgage broker, Bruce Salik. It's such a pleasure to have you here. And I've been getting tons of questions about the mortgage process. So I'm really glad that they're able to get it from a firsthand expert and does it every single day. So Bruce, if you would please introduce yourself, maybe give them a little bit of background of how long you've been in the industry, things like that.
Well, first off, Jose, thanks for having me. It's great to be on with you. I've been in the business now 29 years, love what I do. The company I work for is Guaranteed Rate. We've been in Rockland County, where I've been in Rockland County for 27 years doing lending. I love to support agents like yourself, help you and your business grow. So I'm happy to support you and talk about whatever you want to talk about today.
Awesome, brother. So, I'll start it off with an easy question in terms of like first-time home buyers, just because, especially with the low interest rates of today's world, I'm experiencing a lot of people either moving from the Bronx or just moving from different areas that are renting and now are finally looking to purchase a home. So when you're about to purchase a home and you're going to get your first loan, whether it's an FHA, which some people don't even know about, or a conventional loan, can you maybe speak just a little bit or give a few tips about, some of the things that a first-time home buyer can do, or what you guys can provide a first-time home buyer to aid them on their home purchase, to help them buy that right home?
Sure. Well, first off, everybody's situation is a little different. So once we speak to the client, we'll tell them what the best options are for them. So there are very low down payment options still available out there. You could do a 100% VA loan. So if you're a veteran, you don't need a down payment. You just need to cover closing costs. Conventional side, you could do as little as 3% down with a first-time home buyer. FHA, 3.5% down. So there are still many options out there for a low down payment first-time home buyer. And even if you're not a first-time home buyer, you can do a low down payment with many of these options I just discussed. Now, I'm going to add to that a little bit. And ever since COVID, there are some lenders out there who have kind of really tightened up their lending guidelines. And some lenders, some of the bigger banks out there are making their clients put down 20% for conventional lending. We are still doing things with as little as 3% down for first-time home buyers and 5% down for repeat buyers on a conventional side. So again, that is not the industry. That is just certain lenders who have just decided to tighten up what comes in their portfolio. So we're still doing those lower down payment deals.
Beautiful. Okay. So it sounds like you guys still have an open menu of things that you guys can provide for first-time home buyers or any other buyers. Now, what would you say in your opinion or within your knowledge about the difference between like an FHA or a conventional? Because if you could put down 3% with a conventional and the FHA, before I used to think, hey, the FHA is the lowest down payment, 3.5, but now I'm hearing 3% for the conventional. Why don't people just go for the conventional? Is it easier qualifying for the FHA, or what would you say?
Well, FHA does allow higher debt ratios to qualify, but again, it's all about speaking to the client and knowing what their profile is all about. Because if a buyer calls me and they have a mid 600 score, conventional lending rates will be higher, PMI will be higher, because the credit score will dictate what kind of rate and PMI you get with a conventional loan. FHA, it's pretty much the same rate of PMI, the same rate if you're in the mid sixes to upper sixes. It's not as heavily tiered as conventional. So it's then my job to say, okay, your rates will be this, your PMI will be this. And what we do for every client when we speak to them, when we qualify them, we give them a visual of what their closing costs, their monthly payments will be, just so there's no surprises. So it's really, every client has a different profile, and it's up to us to kind of just read through it, see what their debt ratios are, see what their credit score is, and see what the best loan is going to be. Because just an example, if you put down 3% and your credit score is in the mid 600s versus, sorry, 3% on the conventional side and 3.5 on the FHA side with a credit score in the mid sixes, your monthly payment on a $400,000 house could be like $400 cheaper on the FHA between the lower rate and the lower PMI. So it's really for us to see what the profile is all about of the client.
Yeah, and that's one of the things that I really like about you guys is that you, just like me as an agent, I really want to not just focus, like for example, when I go to the house and I'm either helping a seller sell or helping a buyer buy, I really like to focus on the interaction and the situation of the person to see how we can best benefit them and what the best options are for that specific client. And it seems like you guys do the same thing on the mortgage side. So I'm really happy about that, because I always like to give it to the person that is an expert at their field. And, you guys are the ones that are doing the home mortgages and things like that. So that leads to my next question. I mean, I get a lot of people that are concerned about getting pre-approved, maybe because they think that it's going to affect their credit, or they want to find the perfect house before they get that pre-approval. What would you say to somebody that, wants to purchase a home, but is afraid that if they go for a pre-approval, that it even may expire before they find that home? Like, can you give us maybe like some insight as to that process?
For sure. So when you get pre-approved, when your credit is run initially, you have 120 days to find a home, close on a home before your credit expires, before your pre-approval needs to be updated. So the pre-approval lasts for 120 days. It's very easy to update it. A lot of people will come to us after they might have spoken to somebody else and they've gotten a pre-approval somewhere else, and they're really concerned about having their credit run again. And the answer to that is, if your credit inquiry is within 2 to 4 weeks of that other inquiry, you'll see a second inquiry on the credit report from me, but it shouldn't score you as a second inquiry. So you're in that 2 to 4 week window where you can speak to multiple lenders, can get multiple pre-approvals. When you go past those 30 days and you're running your credit report constantly, that's when you can get a ding on your credit, and it can hurt your score. Now, it won't hurt your score as much as if your score is in the higher tier, but it could hurt it if it's in the middle tier. So look, when you're getting pre-approved, you want to make sure that you're going to buy, or you want to start looking at homes right away. In today's COVID world, and Jose, you can kind of speak on this, you really need a pre-approval to get in a house. Sellers, I don't think, want you in their house unless you have a pre-approval, where before an agent could kind of just say, hey, yeah, I'll take you around once or twice, and then, it's up to you to get your pre-approval. What's your thoughts on that today?
Yeah, so for me, I mean, it's the same thing. And even before the COVID, I mean, a lot of sellers just really want to make sure that when they're opening their doors to people, that they're letting credible and able buyers. Because it's like, even if you put yourself in the position of a seller and you have to get your home ready, you have to clean the house and everything, and you have to make sure that everything is nice and tight. It takes time for them to do that. So when you're opening your doors to a buyer that, may be serious and has every intention to purchase a home, yet doesn't have a pre-approval, I mean, my experience is, and this is what I want to avoid, is that I just would rather have them pre-approve for that number, so that when we're showing them the houses, there are no surprises, whether it's a $400,000 house that we're showing them and then they only approve for 350. Now it's going to set a negative trend or a negative pattern, because they're no longer going to value the homes that they're qualified for. They're going to want to see those 400,000 houses, those 450,000 houses that may include, more amenities or more updates than the houses that they're really qualifying for. So it just really makes the process a little bit more complex when you don't have the pre-approval versus when you do have the pre-approval, and you're certain of what you can purchase and you're certain about making offers. So that's what I would say on my point. And
yeah. Can I just add one more thing to that?
Yeah.
So when your clients, or when clients come with a pre-approval from outside of this area, the first thing I like to discuss with them is, hey, did your lender go over closing costs with you? Because one of the things, or I'd say at least 50% of the time, when they're pre-approved from a lender that's outside of the area, they don't have a grasp on what the closing costs are. So in our area, in Orange and Rockland County, taxes are due once a year. You come up with the full year of taxes when you go to close. So it's my job when I'm pre-approving them or just speaking to them to make sure they have enough for closing, because I can't tell you how many times their lender never went over the costs and they end up being a lot more because the lender doesn't know our area. So unfortunately, a lot of clients got burnt at the closing table because they didn't find out till the very end that the closing costs, the taxes are due once a year. So, kind of getting that local pre-approval, COVID, no COVID, is so important because you need to make sure your lender has a great grasp on the fee structure and what it's going to take to close a deal in this area.
Yeah, absolutely. And that's when I would refer them over to you so you can go over the fees and everything, because even as a first-time home buyer, they kind of need their hand held and needs to know exactly what it is that they're going to pay for at the closing and be prepared for that. Like you're saying, no surprises, or trying to avoid any surprises. So, that was actually going to lead me to my next question, which is going to be, what is the difference between, well, you kind of talked about it a little bit in terms of a local mortgage broker or a out-of-state mortgage broker, but I wanted to ask you, what's the main difference between a mortgage broker and a lender, like a regular mortgage lender that works with their own bank?
Right. So there's when you get pre-approved or when you go for your mortgage, you can work with a savings bank, a credit union. Those are direct lenders. We are direct lenders as well. We are a non-depository bank. We are our own funding company. So Guaranteed Rate is a mortgage bank. You just can't deposit any money into us. So what's great about us is we're in-house. We have our own lending in-house. Okay, we make our own decisions in-house. We're not brokers. A broker takes the loan and delivers it to somebody like us or like a savings bank, and we make our own decisions in-house. With us, when you're dealing with, a savings bank or a credit union, you're just dealing with their rates and products. When you're dealing with us, we have the ability to sell it to multiple investors on many different levels. So we have 50 different outlets to sell it to get the best rates, the best product, the best everything involved. So obviously I'm biased to the mortgage banker because that's what we are, but I do feel with us, you have more options. With a broker, you're dealing with a third party. Sometimes you have to pay that broker. And sometimes from a timing point of view, when you're dealing with a broker, they're delivering it to a bank. So they're a middle person. So you're not getting the answer directly. Not that there's a problem with that, but when you're dealing with a fast timing, it's always better to deal direct. But again, and the difference between us and a savings bank is that, we're a lot more nimble than some of the bigger banks out there. We can get things done. If somebody says, hey, I got to close a loan in 2 to 3 weeks, we could do it. And in this market, the big banks, I can't say with certainty, but I have a feeling that they'd be challenged to get it done in that kind of time frame.
Yeah, and I also, one of the things that I heard about the bigger banks too is their underwriting process may be a little bit differently. Is there anything that you've maybe know about that in terms of the bigger banks versus the local banks like Wells Fargo, Chase versus, Guaranteed Rate?
I can't speak for those guys directly, but I do know that they have what's called some overlays, which is certain expansion of the guidelines. So where we might be able to go to a certain debt ratio, their overlays may say, hey, even though we could sell a loan to Fannie Mae and Freddie Mac with 97 or 95% financing, our overlay is going to keep financing at 80%. You need to put down 20% for us to get financing. With us, as we mentioned in the first question, you could do 3 or 5% down. So every bank has their own overlays, and they're more than ever right now since COVID. But we're usually a bit more flexible than those bigger banks with lesser down payment options.
Gotcha. Okay. Well, hey, that pretty much sums it up. I definitely don't want to keep everybody here for 3 days, but thank you so much for coming on here, Bruce. You definitely answered a lot of the questions that, I get every single day from consumers or buyers looking to purchase. So I really appreciate you coming on here. if they ever needed to get a hold of you, if they were looking to purchase a home and they wanted more information on their financial aspect of life, how would they be able to get a hold of you?
So the best way is my cell phone, which is 914-263-7999. Text or call me there. And, our response time is pretty quick. We will get back to you right away if we don't pick up. But if you can't get me right away, it's just send a text, but you should be able to get us right away.
Beautiful. Thank you so much again, Bruce. I'm looking forward to closing many deals with you. And
Likewise.
yeah, be safe out there, brother.
Thank you. You too, Jose. Thanks again for the opportunity. Take
Of
care.
course. Take care. Bye.